Hey, this is Dodge This with Honeycomb Trades. You guys know me from primarily, promoting and encouraging everybody to do long-term investing, and working on your phased approach to building that. But um, one way to generate that income if you don't have extra money to put towards that long-term account is to go ahead and sell options. So I just wanted to recap one of the trades that I shared in the room, and this is also included on my watch list I post every week on X. So go ahead and follow me along on this trade. How did I make an extra 1,000 last week passively selling options, even with the ticker going down? So let me just switch it up to the chart. I'll kind of show you the setup, what I executed, and then the ultimate result, right? The end results. All right, so here we go. The IREN was the ticker. I'll share the daily first. Um, so ultimately, last week I had been watching it. It had a really big push up. And the breakout area is the zone that I kind of marked here. The 53.24 and the 50.64 is kind of the zone that I was looking at as a pivot. Well, so basically, 2 weeks prior, that's it pushed up to that level, and then we saw it reject and come down and hit my zone. Right, I have a zone at 44. And all the way down to 40. So it held this zone, and then we got that big push up. But the breakout that we saw last week was not until it got over that 50 level, and then it broke over that 53.24, which is the candle body high of that week. So once it got this big push up, it got to the 60s. And Friday it sold off. So right, so I'm thinking in my head, it was like it was a pretty bullish move. It was a great breakout. I sold a put, and I went ahead and identified that based off my zone, right? So if if it had any kind of retest or back test, of this breakout, I would be watching it between 53 and 50. So on this Friday, I went ahead and sold my first set of puts on this. I sold the 52 put for 515 expiration, and I collected a dollar one a contract. So $1.01 per contract. I did 5 contracts, so it netted. I got paid premium of 501.62 after the fees. So that's went ahead and opened Fridays weekend. We actually gapped down, and so I was watching it, and I liked how it did backtest that 53 zone that I kind of identified as that was the pivot where it broke out, and then it was also a pivot where when it tried to break out the first time and failed, it sold off from there. So um, once it tested here, I actually added another lot of puts. I sold to open another set of cash secured puts, and I went with the 49 strike, which was just under the 50 area, which is kind of the bottom of the zone that I identified. So I liked how ultimately this was holding. So basically, I identified the setup. I looked at the strikes based on my zone. I picked these two strikes because one held, or one was the initial zone that I liked for the first target, and then the second, when it retested, it held again. So I went ahead and went with the basically a re-add. I added more. Same expiration date, but I have two strikes now. One at the 52 put strikes, and the other ones were the 49 put strikes, which I picked just underneath my zones, just in case they fail to have a little bit of a cushion. And so basically just looked at this trade. I literally I bought the first lot on Fridays, bought the second lot on Mondays, and then by Thursday I went ahead and closed these out. So the reason why I closed them Thursday is because it had tested this multiple times, as you can see, and every time it worked off. It finally got that big push on Thursday, and we got back to that 60 area. And at this point, I was kind of paying attention more because it's Thursday. These contracts expire Friday, so between with theta and then getting closer to expiration, that's kind of the only time you have to actually look at it, unless it's going against you. And so in this case, once it started to hit my target levels on my puts, I went ahead and locked them up, right? And look what happened. We ended up selling off a little bit more on the Friday. We got the gap down on Friday as well, but when I say, it's about as close to passive income as you can with option selling, I mean that in a way where it's a day trade or a swing. You're constantly having to check. I mean, I guess it's close to a swing in a way, but as far as like day trading goes, I don't have to sit here and watch the charts all day, seeing what it's going to do and having to manage it. And so here's the end result. I ended up getting about, let's see, what were my, yeah, so by that Thursday when it had pushed to 60, I was essentially trailing my win there. And then so once it got to the 90% area, I was like, okay, I think I'm gonna lock both of them in, because at this point, there wasn't a lot of money left on the table as far as how much more I could have collected on the contracts. Once you collect 90% plus of the contracts, you basically got the majority of that move. And I collected as much premium as I could without having an additional risk of holding it through expiration. So this is the actual netted realized and basically how it broke down. So first contract I mentioned, I had five contracts. The cost, or how much I collected premium, was 501.62. When I bought the close, it's essentially closing that cash secured put. I paid 45.11 back, and then my net realized gain was 456.51 on that one. And then the ones for the second ads that I added Monday, I actually had 10, a lot of 10. These ones I collected after fees was 778.28, and then it cost me 50.23 to go ahead and buy to close those, and my realized gain was 728.05 on those. Excuse me. So basically the max gain I could have gotten had I held these to expiration was 1279.90 if I combined both of the proceeds, right? But I collected 1184.56 total. So left about just under $100 on the table. But if I held them through Friday, they both still would have expired worthless, 100%. No risk of assignment. It did get pretty close though, because as you could see on the chart, Friday IREN did get back and it hit 50. The lowest it got was 52.86. So it got within 86 cents on Friday, of the strike price. Which obviously anything over 52.01, you avoid assignment and those contracts expire worthless, and you collect 100% of that premium. So yes, technically I could have held them, but when you get such a large move like this, you just want to make sure you lock it in, and like I said, it was like $50 on one set of contracts and 45 on another. So I was definitely comfortable, locking that in, and basically I had capital left, freeing up that capital in case I saw another opportunity. But yeah, I just want to do a quick recap on that setup. You know, uh, these selling options is definitely a great alternative, for those that aren't able to day trade, or constantly be looking at charts regularly. So that's why I was saying it's about the closest you can get to passive income, when you're dealing with options. But yeah, thank you guys for listening in. My watch list goes out every weekend, and of course, if you're with us in the room, follow my channels, and then everything I enter, everything I close, everything I manage, I go ahead and share it in my channel. And then, of course, if you have any questions, you guys have any chart requests, go ahead and feel free to post it, and I'll follow up with you guys soon. Thank you. Bye.